Hi, welcome to the Market Alert for Tuesday, the 26th of July 2016. So yesterday the market fairly quiet. Initial move at the start of the session, we saw prices moving lower from the 1510 PTP signal there, and then prices managing just to touch the scalp on the 1730 bar, so you can see it took a moment or two for prices to actually move lower. When the market got down to this level, I gave it a chance to breathe and also to see if it would actually move and hit the next psychological level there of 18,450, but the market came back and therefore took out the stop, so finding support there before moving high. Normally I wouldn't do this, as I've said before, you want the market to drive through. But as we'd already got a bit of a down move in the background there, I was hoping that the market would continue, and especially as we have the implied volatility down at those lows at the moment. We then had another sell signal, this one coming in at 1920, just before 7:30 there, and we see the market trading down, filling the order, and then just trading sideways there. So this one you make the decision to come out as we get closer to the end of the session, and coming out there with just a couple of points before the market then put in a buy signal at 25 minutes past 8 and moved to the upside, which actually was a profit, but holding it through the end of the trading session there, and the spread widening to 3 points as well, as it does once we get to 9 p.m. The daily charts, we can see prices already starting to reverse and trying to move back to the upside. As I said before, they don't want this Ponzi scheme to be moving to the downside. The central banks have got full control of the stock markets now. They're no longer a fair market based upon supply and demand. It's all computer traded with the high frequency traders to hold these positions. And again, you can see this sideways market now we've had since a week ago. On Monday, prices just trading sideways, and they're doing their damnedest to bring this back up. The giveaway here is the implied volatility, and two, the volume. You can see it just rolling off and tapering off. The last three sessions making lows all the way through, and again it's going to be interesting to see what happens today. Tuesdays are notorious for not being the best at trading day. They can be a rather choppy, quiet session, especially when it's the day before the FOMC announcement, which of course is tomorrow. So we'll see how the market opens, but I'm not expecting a huge amount unless something of a geopolitical nature or something out of the blue comes out. News-wise today, we've only got consumer confidence. This is out at 3 p.m. and this is quite a sharp drop actually from the previous of 98 down to 95.6. Let's see how this comes out, and again, even if it's bad at the moment, they will use this to pump the market back to the upside. It may go down sharply to begin with, but then they will reverse it and move it back to the upside. In the implied volatility, 1072 just creeping up there yesterday. Again, still can't figure out why we've got this horizontal line in the historic volatility, but as I said yesterday, our concern is with the yellow line, the implied volatility, which seems to be working fine. And again, you can see this having made that low of 987 on the 19th of July, we are setting ourselves up for a big move. And of course, if you think about it, if the Fed do nothing, there's no credibility. If they do something, there's still no credibility from tomorrow's meeting. So we could see from Thursday something happening in these markets. The markets are fed up of being sideways, and I would imagine that most traders are fed up of it as well. But again, it depends what Yellen has to say tomorrow evening. But it's not a live meeting, so the news will be out fairly quickly and then we'll get the market's reaction. But there is a credibility issue with all central banks, and certainly the figurehead of all of those banks as well, Draghi, Yellen, Carney, as far as the West is concerned, and then Kuroda of Japan as well. It's as if they don't know what to do anymore. So we'll wait and see what happens on Thursday, the meeting tomorrow on Wednesday. So that's really it in a nutshell. It is difficult at the moment, but because that's, as I said before, the markets are news driven, and the central bankers have seem to have captivated these markets at the moment with their rhetoric or the lack of it. So until they say something that will move the markets either way, then they will remain sideways, and there's not a lot we can do about that at the moment. Right, that's it. I will see you in tomorrow's edition. As ever, thanks for watching. See you in the next one.